Hey traders, welcome to Charts and Coffee. Hope everyone had a good weekend, some time away from the charts. We are embarking on the first week of June. It's a brand new month, gang. So we take away from May what we learned about the macroeconomic trend, which is stable, not terribly dovish or bullish, which kind of in this environment are the same thing. And we're taking a look at a week where we're going to get jobs data this week, both by way of the JOLTS and the non-farm payroll on Friday. And remember, the Federal Reserve has a dual mandate, right? It's not just that inflation target, but it's also getting to the inflation target without destroying the jobs picture. So both those data points are really, really important. And while we got the PCE last week, which was pretty flat, if not arguably kind of cool, interesting that as we wrapped up May, both April and May had very volatile end of month action. And not so coincidentally, these are some of the most blurry macroeconomic expectations. What do I mean by macroeconomic? Is the Federal Reserve going to cut or not? And how many cuts are we going to get? If you caught me yesterday in Top Tier Outlook, we talked about how there is still 1 to 2 rate cuts factored in to the Fed Fund futures. Now, remember, the Fed Fund futures have one reason to exist. They exist to allow traders to speculate on whether or not the Fed's going to cut at each meeting. And it's the best, most undiluted way to take a look at people who are actually opening up a trade, placing their bets on those expectations. So with that being said, we're going to continue to move on through June with a very cautious, bullish bias. And look, let's step back and take a look at the ES and the NQ, right? Because that's where everything lands. And what I mean by that is there still strength? Is there still support? It sometimes will be one, if not the other. So in an uptrend, we're going to have a backbone of higher lows and higher highs. It's those higher highs that get the attention. When we stop putting in higher highs, there's a certain segment of the retail trading populace that freaks out because typically retail traders are going to be buying at highs, and without new highs, their positions suffer. And that's where that really kind of sour doom and gloom starts setting in. Now, traders who are understanding that the backbone of a trend is indeed support, we still have support. While we may not have an uptrend on the S&P anymore, we do have an uptrend on the NASDAQ. And as I mentioned in the Friday video, if you caught that, the video called Sanity Check, said, look, all-time highs, which we did punch up to just May 23rd, this is never bearish, right? All-time highs are never bearish. Yes, we can pull back from them. We can retrace 1, 2, 3, 5%, but is that a crash? Remember, our definition of a crash is probably individual, or our definition of bearishness or a bad market is based on where we are in the market, right? So if someone bought a dip, it's a very different place they're sitting as opposed to buying on the high of that candle on May 23. So I was watching a video some weeks back, and this guy was making his way through the rounds of podcasts, and he's a former CIA agent. He's an honest to goodness spy. And they said, what's your superpower after having been a spy for the CIA for so long? And he said, perception versus perspective, right? How are we perceiving things has a lot to do with where we sit. And so think about that perception versus perspective. And if you have to Google the definition, which I had to, do it. And if you want to catch the conversation, if you go to YouTube and you search Andrew Bustamante, perception versus perspective, I think for traders, it's so important to keep those two things separate. Andrew Bustamante. Yeah, I don't know much about the guy, but that conversation, perception versus perspective, is so applicable to every walk of life, but certainly when it comes to trading. All right, so let's get to it, gang. As always, let's jump into the questions. And first up is, I realize I'm not lit up today. Hang on. Let me sort up some lighting here. We'll jump into the questions. And let me jump into the questions here. Bear with me. Don't need to be sitting here in the dark, do we? All right. Okay, so first up, Trader Momo asks, let's see here. ISM manufacturing at 10 a.m. Are these volatility events that we can scalp on? I'm not a scalper per se, Trader Momo, but I do have the Lorna bot in the Sector Secrets Mastery. We have 2 scalping sessions per week in that room. So if you want to learn more about scalping, I would definitely recommend talk to Lorna bot. She's been testing and really fine-tuning this approach for over 2 years, testing it through multiple seasons, behaviors of the market. I would say from my experience, no. Because the challenge is this: anytime we're going to have increased volatility suddenly, the stops on a scalp are usually based on continuation. So a near-term stop, which would typically be what most scalpers would use, may not have sort of the shock absorption. So I would say no. The way I look at any kind of hot zone like that ISM or even the non-farm or anything that we have coming up, jolts tomorrow at 10, I look at it this way. What's the best shock absorber? I need something that's going to be able to handle a lot of volatility at the release. So I prefer to go to longer time frames to capitalize on that. So scalping would be great in the aftermath. I would not pre-position with a scalp. And in fact, I would not pre-position it at all. But in terms of the aftermath, if there's some clarity on the move, I think in the aftermath, in the immediate aftermath, it's very possible. But again, I would definitely lean on the Lorna bot to tell me, because she's got hundreds and hundreds and hundreds of trades based on the scalping methodology that we teach. As one, we have a lot of different methodologies in Sector Secrets. She scalps, I day trade. We both swing trade. We have position portfolio positions. But from a scalping perspective, the timing is going to be tricky. And I would not pre-position, meaning get in at 8:29 for an 8:30 hot zone or get in at 9:59 for a 10 o'clock hot zone. All right, next up. Qualcomm is on fire. Yeah, so we're seeing a lot of strength in Qualcomm. We built a position in Qualcomm on Friday. It was a tough one. We scaled in, and that means that at the initial alert that I send out to members, what I do is I put all the levels that I want to buy Qualcomm at in that original alert. And it was a tough one to manage because Qualcomm had quite a session. SMH saw some intraday profit taking as we wound down the month of May. And that intraday profit taking pushed Qualcomm outside of its price movement range, which is a 68% probability of the way in which any symbol is likely to move on a particular session. So yeah, Qualcomm's on fire, and we'll be managing that from the conservative level that I still have, and many of our Sector Secrets Mastery members do have. It's sitting at 208. I'll take it. I'll take it. We still have an open, I'm trying to think. Let's see. Yeah, we have Qualcomm from $4.85 in the room, as well as I think many of you probably still have Apple. We also have the Apple position that we took into end of month, and we still have that as we begin June. All right, thanks, D. I appreciate that. Yeah, 5 minute on the 5 minute Apple chart. I won't make any decisions upon what I'm going to day trade, and 5 minute is the day trading time frame, which is to say, when I'm looking at the 5 minute, what I'm trying to do is find a setup that could give me an entry, preferably before 10:15, 10:30, and follow through maybe into the midday doldrums, and maybe for that day, right? Just for today, Monday. But we also have that swing open in Apple as well. And then we'll see where that ends up taking us. But as far as a 5 minute, I won't know until about, so Rog, when do you put in your first day trade, right? I can't put a setup on Apple at 11 minutes after 9, but about 5 to 10 minutes after the open, after we get that rush of participation at the bell, we'll look at what the structure is. We'll see where the support and resistance is. But right now, yeah, Apple's sitting well above the 192.25 level, and that's on the bullish side of things. It's above the previous session close, and as long as it can do that, I'll likely be looking for more follow through to the upside. By the way, I want to remind everybody, if you've been wanting to check out whether it's the way that I day trade and swing trade, our position portfolio session is tomorrow at 3 p.m. We've been building a portfolio since 2022. That's one of the sessions we have in the mastery, which is up quite nicely. And we're continuing to find opportunities for much longer term entries. And usually this is months, if not years, in terms of the time horizon. So that'll be tomorrow. So if you want to join us, please take advantage of the Memorial Day sale that goes until June 7. And then that's it. So 4 more days. And and this is for any of many, I shouldn't say any, because I know there's a few things that are exceptions to the sale, but 3 things that are not exceptions, 3 things that you can grab at 30% off are the Sector Secrets Mastery, the daily price movement ranges, and the hourly price movement ranges. And those are the daily, the gold and gray on my chart, and the green and red zones that are automatically plotted on the screen every morning that you see here in Charts and Coffee. Go grab them while they're on sale if you've been wanting to kick the tires on them. All right, so let's get to it. Microsoft. I've been favoring Apple over Microsoft a bit, and I've been favoring semiconductors over Microsoft a bit. Not that Microsoft obviously could not rally, much like we're seeing quite a bit of strength this morning. It did. So if you're wondering, Rock, how would you trade Microsoft? I don't have a position here. However, if you're looking at the setup that I use for the daily price movement ranges, first you need to put those zones on your chart. So you can go grab that for 30% off. And then notice how, and this is actually a pretty good setup, John. Notice how the yellow candle, it's got to be a yellow or a green candle to buy the gray zone. So we color code this stuff to absolute simplicity. And so if we take a look at the way it bottomed out in that zone, that set up the buy. But much like my Qualcomm trade, Microsoft had a very volatile Friday session as we wrapped up the month. But nonetheless, it wasn't a short, right? It wasn't a short at all as it traded down into the gray zone, yellow or green candles in, for the most part, an overall uptrend. You can see the structure. That is a long position. So that did trigger on Friday. And then if I want a fresh opportunity at that, at 9:30, as soon as the bell rings, there's a brand new set immediately and automatically plotted on your charts, a brand new pair of zones, the gold zone resistance, the gray zone support. And then if we are able to trade into that zone today, yeah, John, it would be definitely something that I would look at as a buy, not as a short for sure. So I like your idea of the buy. We just need the trigger again. As far as gold futures, so it depends on the time frame, gang. Gold day trading, I won't know until after the bell. Again, please remember, as soon as the bell rings, how many times have we seen incredible amounts of volatility? That's the nature of the world we live in with that 9:30 to 4 psychology. However, that being said, keep an eye on 2327 on GC. And David, if we get that test, that would be worth watching for sure. And then we could either go with gold futures, micro gold futures, or even GLD calls. So yeah, I would definitely keep an eye on that. All right, next up, will I look for sector rotation on the first trading session this month? Dave, I won't. However, I did a breakdown for the Mastery folks on the topic of sector rotation, which is something that gets talked about a lot, but it's one of those things we can see as or even after it's happened. But before it happens, there's 2 things we have to realize. Sectors don't have to rotate. They don't have to rotate for even more than a few hours or a few days or a few weeks. It's not something that persists necessarily. That's the first thing. Number 2 is we don't have to see rotation. Sometimes we can see participation, broad-based participation, where the rising tide lifts everything, including laggards in energy, laggards in consumer discretionary, agribusiness, and even home builders and construction. So we could see a high tide lift all. We don't have to see what's commonly known as sector rotation, which is just profit taking from the top sectors, and that money funneling into the bottom sector. So we can reduce the number of sectors, a little bit better pinpoint what could benefit from sector rotation. And usually it's going to be profit taking at the top of this list, benefiting things that are underperforming, typically at the bottom of the list. So I don't necessarily look for rotation, but I want to acknowledge what could have rotation and then ultimately how I would want to take advantage of it. All right, next up is, do I have any insight on the ECB? What are my thoughts on ECB? One, we want to know where it's going to impact. Impact is going to be largely, obviously, in the euro, therefore then also the US dollar and treasuries. So when we have that ECB event coming up, it's less about whether or not for me they're going to be dovish or hawkish, and more about, well, if I have a setup that I would like to have in the euro or in the FXE or the EWG or the EWI, all those country ETFs that are going to have their stocks move based on the tone of the ECB. I would say I want this setup already there. I want to find and pinpoint that watch list, discard the things that are not going to be impacted by that singular event, and then find whether or not there's a setup there, and then let the event close the distance to a setup that I already like that needs a catalyst. And ECB could be obviously the catalyst. All right, Alex says, I joined SSM for a year. I hope you took advantage of that sale, Alex. You'll be sick of me. I'll tell you, I love our group. I love that we are trading focused. It's an active group, even from about 9 to 4:30 every day. We support each other. We're focused on the markets. And, I've always dreamt of having sort of a virtual sort of trading floor where we're all working together with similar tools and a similar approach, and we're the eyes and ears for one another. So not at all. Now, great to have you, Alex. TMUS, so telecommunications, IYZ and XLC are going to continue to benefit from strength in certain telecommunication stocks. But here's the thing. TMUS has just obviously launched higher. But what I like to point out is before the move higher, that tends to get a lot of retail attention, I should already have a pretty good take on what I think TMUS could do in terms of directional bias. If I'm ever looking at a symbol and I don't have directional bias, it's not going to be a symbol I can take advantage of. So something like TMUS, what's far more interesting is what was happening before it got, quite frankly, launched out of a cannon. And you'll see here, take a look at the support at the automated Darvis. Now you'll notice I automate as much as humanly possible because it adds speed, it adds accuracy, and it most importantly eliminates subjectivity. That is what it is, right? I'm not drawing something that I want to see. That is where the level is. So think about how many times we tested support before we broke through resistance and then continued on. And so really the gem of TMUS was happening really through, I'd say, late to early May. And that is, when we talk about a setup, really think about what that word means. It's setting us up for something that's going to happen. And so if I think about having bullish directional bias, if it's supported, it's mostly green and yellow candles, which means bullish to neutral. I don't want to be a short seller, right? So I use support levels like this to capitalize on a buy at support, and then a break of resistance is just that much more emphasis to how bullish this symbol really is. So now I need a pullback, right? Now I need some sort of retracement to support to engage what seems to be a pretty strong, and you can see here, bullish momentum, bullish trend symbol on the daily time frame. All right, and I think I'm out of time. Oh my gosh. All right, gang, just like that. Thank you so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. Be good to each other.